Hey everyone, welcome to Real Women Real Estate episode 30.
Whoa.
Woo! I know. Okay. When
Too
I
much,
saw this
right?
episode 30, I was like, wow, time is flying. Man, super grateful though. All right, y'all, we got a super special guest today. All three of us are really excited to have this young lady. I think we're going to learn a lot. It's going to be really inspirational. We have Miss Reunekiea Williams, who is CEO of Fortune Key Financials and Capital on Demand. We're going to break down who she is and why we are excited to have her here. But first, we have a quote for the day, and I think this might be a first that our quote for the day is actually from our guest. But I saw it and I was like, oh, yeah, this is bars. So today's quote of the day is it's not about working for every dollar, it's about making every dollar work for you, period.
Very good.
All right, guys. So Reunekiea Williams is a financial and real estate powerhouse whose life purpose is leading people to financial freedom. After starting her real estate career at the age of 17 and earning a dual bachelor's in finance and real estate and a master's in finance from Georgia State University, Reunekiea has not only amassed a real estate portfolio worth millions of dollars, but she is also the founder of Fortune Key Financials, which is a financial advisory, real estate, and creative financing boutique firm, and has recently launched a private lending firm, Capital on Demand Inc., which specializes in residential and commercial funding. To date, she has raised over $7 billion with a B dollars from private investors and institutions to lend to investors nationwide. Listed as one of Yahoo Finance's top real estate entrepreneurs to watch in 2020, Reunekiea is able to leverage her unique background in education and financial advising, securities, insurance, and real estate to help individuals create and protect generational wealth. Today, Reunekiea is joining us to share the importance of private lending and creative financing. So, welcome. That was a mouthful. I'm not gonna lie, girl. You are decorated.
That was a lot.
That
I
was
was like,
amazing.
thank you, thank you. That's
um,
been accumulating over time for about 15 years. So it's not something that just started yesterday, but started this journey at a very young age. And I'm gonna start it off by saying this, and I know you all haven't said anything yet for me to answer, but I'm gonna start off by saying this. Once we really begin to understand, or we begin to pick our purpose and our career path as early as possible. It is so very important because that allows you to attract the right people, the right resources, the right things to your path along the way. If I started this path at 17 years old. So over the last 10, 15 years of my life, I've been attracting this amount of resources and people to me because I really just understood exactly what I want to do at a very young age. So I'm not for sure how many women out here or how many, whoever have kids, but most importantly, help your kids to kind of figure that out as early as possible so you can minimize, so many dead ends that we all travel when we first start our journey. We can try to minimize those and try to focus on the journey that we see fit for us long term. So.
That's awesome. And I'm glad you shared that because, one of the first things we wanted to talk about was how you began your real estate journey. Starting that at the age of 17 definitely is monumental. It's not really something you see. So how did that start and how were you able over the course of 10 to 15 years, how were you able to go from a real estate investor at the age of 17 to now being a private lender?
Great question. So it's funny. My journey started. I really did not have anyone to show me the ropes. No one. I didn't have anyone in my family that was doing real estate. Honestly, didn't have anyone in my family that was a business owner. I grew up. I grew up in a household of military background and factory worker. So no one. Only thing that my mom really understood was the value of having degrees, the value of a good education. And that's what they instilled in me. At 17 years old, I decided, I don't know where it came from, where it was downloaded from. I decided I was going to go to school first I decided I was going to go to school for accounting. And the reason why I decided accounting was because I was just already good with numbers. My mother is an accountant and a CPA, tax CPA. So she runs all the taxes in the area where we grew, where I was raised. So numbers was already always instilled in me. However, I would never forget this when I told my mom, I said, hey, I'm thinking I'm gonna go to school for real estate. Here I am at 17 years old, telling I was gonna go to school for real estate. And her first thing out of her mouth was, I don't think that's a good idea. It's commission-based. It's commission-based. It is commission-based. She was like, I think you need to go to school for something that you can get you a good job. I was like, oh, okay, cool. So, not realizing at 17 years old, I'm sitting here thinking like, how can I not make money in having a product that we all need? And here's my 17-year-old mindset. This is why it's very important that even at a very young age, although our parents mean just good by us by kind of showing us the ropes, sometimes it's very important that you kind of have your own voice, even at 17 years old.
Yeah, so you knew that, I'm sorry not to cut you off, but you knew at the age of 17 that like something not right. Like real estate makes money. So yeah, so something's not right.
I'm like, no, I was like, I can't agree with that. But what she did make me do, she made me think bigger than real estate. She made me couple my finance degree and my accounting degree. So my whole thing was, okay, maybe she's right. I'm 17 years old. I don't know if she's right or wrong. I can probably land a job on Wall Street. If anything goes wrong, I wanted to move. That was my second best thing. I wanted to move to New York, land a job on Wall Street, some type of analyst on Wall Street, and just do something big like that. But I didn't know she was right. So that really made me couple my financial and my accounting degree with my real estate degree. Like I say, no one in my family was in real estate. It was just one of those things that I decided that, hey, everyone needs real estate. Why not go to school for real estate? And also, going to school to get a bachelor's degree in real estate, where that was unheard of too. Most people go get a real estate license and now they in real estate. So, I was taking an unorthodox journey, but it taught me so much, by getting that real estate degree, it really taught me income producing properties. It taught me commercial properties. So that's kind of how I started my journey. It really was just one of those things. I don't know, it just was instilled in me. It just downloaded in me. I was like, one day I just woke up, I was like, hey, I'm gonna go to school for real estate and accounting and finance. And that honestly, I was probably one of those ones that was just lucky to pick the right degree in the right industry the first time around.
So when you, yeah, that is amazing. So when you got started and like you got your schooling, you know this is what you want to do, did you start investing or were you like brokering deals? Like, how did that
transition? So that's a good question. So here I am in real estate. So really what got me in this journey very early, because I coupled really my finance and my real estate degree. And when I coupled that, I began to learn that at age 17, 18, 19 years old, I had a aha moment. I was like, no, we're all moving backwards. We are working for every dollar and we need to make every dollar work for us. Here I am at 19, 20 years old at that mindset where it's like, whoa, we're working backwards. It's not about working until we're 70 something or 62 years old. It's really about taking the amount of money and making it work for you. So I started to, so that's when I began to kind of get kind of into my financial advisory role. I'm trying to, sell life insurance and things of that nature, which probably one of the hardest thing I can possibly get myself into. I mean, you're talking about, early, mid, like 2009, 2010. This is kind of before entrepreneurship is this big wave now. Trying to be a financial advisor, this entrepreneur prior to entrepreneur being the wave. Here I am at 19, 20 years old trying to teach 40, 50, 60-year-olds that they need life insurance. So it was a hard sell to me because everyone looking at me like, what I know about life insurance. So, but all of that, saying all of that, I went to buy my first piece of real estate at age 21 years old. Now that's when my journey really started. When I decided to go buy that first piece of real estate. So here I am, just learning about it and very eager. And just understanding the power of real estate very young and realizing everybody around me didn't. So I had to walk a lot of my journey alone because none of my families and friends really understood real estate investing 15 years ago. So I bought my first property by myself. I bought my first property using absolutely no income. I used credit cards. I used at that moment I got a lot of scholarships and Pell Grants and things of that nature. So I took money from that and I paid for my earnest money and closing costs, and I bought my first property when I was 21 years old. Just
Hold
really
on.
using my
I'm
credit.
sorry. Did you just say you bought a property with scholarship and Pell Grant money?
Pell Grant money and credit cards. I mean, I'm
And credit
20 years
cards.
old with really A1 credit at that moment. And I had a guy, just kind of, I began to network very early in my career. So here I am, wanted to just get out in Atlanta. I'm stationed in Atlanta, Georgia. I wanted to get out in Atlanta, began to network with people, and I began to get into these real estate networking events, and I began to meet people. And they had this street way of doing real estate. Here I am coming from school and I'm all institutional and I got everything by the books, and here they are doing wholesaling and creative financing and things that just not taught in school. And that's when I began to learn, just on top of what was being taught in school, I began to learn the creative financing ways, because that's not been taught in school. They would never teach you how to really finance your deals outside of a bank. So you have to really learn that outside. So I learned that. I learned about creative financing. I learned about wholesaling, which is something that is not taught in school either, which is I call it just street real estate, because that's just where you're going to learn it. Learn from it is just investors in the streets, investors who are just out there teaching you about wholesaling. So it's kind of how I started bought my first property.
I'm just in awe of the Pell Grants and
Yeah. I mean, but you talking about during a time where people were just blowing that money. I mean, I don't know.
That's what I'm thinking about. You know how many people I know? I went to Xavier. We went to HBCUs over here. You know how many people I know that was blowing their scholarship money on Gucci, Fendi, Prada, and you over here buying a house?
And I'm over here buying houses. And it's only because I was learning it. I probably would have been the same way if I was not learning about real estate and finance. The fact that I was learning about both of them at the same time, that really, really put my mindset, and I began to understand the power of money. I began to understand the power of investing. I began to understand the power of turning $1 into $2 tomorrow. So when my mindset changed, or when I learned that at a very young age, I couldn't go do what people would normally do with money, because I just understood too much. Mm-hmm. It's like, no, I'm trying to retire at the age of 30. I want to have enough real estate working for me and cash flowing for me by the age of 30. That's not the route I want to take. So I just started taking that route very early. And I teach that, and don't get it twisted. I kind of started taking that route by default because I just began to learn about it very early. But now that I took that route very early, I think it's actually a lot of value add to really understanding how money works very early, so you don't mess up that credit, so you don't blow it on Gucci, Prada, and all the things that that we love. And we take a different route. Don't get it twisted. I love those things too. I have a shoe fetish. I have, I love purses. I love trips. I love all those, but it's a sacrifice. Mm-hmm. It's a sacrifice. And what I did, I sacrificed my 20s to invest, where most people are blowing money. And now they have to sacrifice their 30s and 40s.
Yeah.
Yep. Courtney, I got you.
It was a moment. It was a real life moment that I just had, because I made a recent sacrifice. I just made a recent sacrifice. Kimberly threw some shoes at me, and I was like, no, Go sit down somewhere. It's a no. I'm going somewhere else with that. You stay over there. So no, I appreciate it.
I'm about some stocks.
Exactly. I'm gonna make that money, make some more money, and that's exactly what my my husband just sent me. No, I want to unpack just a couple of things that you said, and then I'm done. The first thing you said early in the conversation was about teaching kids and giving kids a voice. I think there's so many parents right now at home with this pandemic, and this is a real opportunity to engage with your children on a different level, on a real life common sense level. And now that they're not in school, yes, it's inconvenient and it is awkward, and you may not be a teacher, but what you just said, give your children a voice. I had a voice at an early age. Like, that's what I heard from you. And I think all parents should kind of just take a step back, you know, dial it back for a second, you know, and take the drill sergeant, you know, mode out, and just give your children a voice. And I'm going to take that. I'm going to take that advice from you and make sure that, you know, my 8-year-old has a voice, so that maybe at 17, he can be doing something like that. And I think the other thing is, coming from the accounting finance realm, I also have a finance degree, and I got stuck into accounting, but that helped me so much as a realtor, because there's so many people out there that all they can do is put a deal together, but they can't fill out the financial parts of it. So I just think that you're right. It just all fell into place, and I can really appreciate the pathway that you took, and it's just ordered steps for you. So I love it.
Fine. Thank you so much for that. And it's funny you said that, because you know, when I was a realtor, I was, you know, during that time of, I'll tell you all about that. You know, I really lost big on that first deal that I just discussed, but there was so much I learned from it. I didn't feel like I lost. I bounced back from it. It was almost a $30,000 loss. But, you know, here I am at 21 years old. I can afford a $30,000 loss. I have kids, you know, you have that time to really bounce back. And that's why it's important to allow your kids to go out there and fail forward early. And what I realized is that from my mother's standpoint, it wasn't the fact that she didn't want me to fail. It's the fact that she wanted to shield me from failure. And because she wanted to shield me from failure, you also shielded me from growth, because there's growth in the failure. It's almost impossible to really stretch yourself and grow until you fail. So as a mother, our first instinct, and I'm not a mother yet, but just understand how mothers work and how women are, our first instinct is to shield our kids and protect them. But what I realized from a man, first instinct is to expand them as much as they can go. So a man naturally push the edge, naturally. A woman naturally shrinks at the edge. So at the end of the day, the man teaches the kid how to push yourself, how to push yourself beyond belief, how to push yourself beyond physical. When you're tired, you're not tired, keep going. How to push yourself beyond what we physically think, because we are spiritual beings, and what we can spiritually accomplish is way greater than what we physically think that we can and cannot do. So as a mother, we naturally protect our child. So I think we have to, and exactly what you just piggyback on what you're saying, give your child that voice. Allow your child to be unorthodox. Allow them to be odd. Allow them to think outside the box. Because if I listen to my mother, who told me not to go to school for real estate, to go to school to get me a degree where I can get me a good job, she would have shrunk me in that moment if I would have listened to her. Not saying that her intention wasn't good. All she was trying to do is shield me from any failure outside of being entrepreneurship, because that's what entrepreneurship is. We failing forward. That's basically what we do as entrepreneurs. We try to figure it out as we go, and we fail forward. And next thing you know, you fell into some greatness. It's like I done done everything I didn't supposed to do. Now I got it right. You just want to push your child and give your child that voice. So I encourage every woman, especially when your child get to that age of about 15, when they begin to really understand what they want to do. Don't shield them to think like you. Allow them to think like them, because they have their own individual purpose too. So.
We use that term, that's Ebony's term, they're failing forward, but it's so true, because even in so many deals, I would say my real estate career started around the same time as yours, except mine went we had to come back. But I learned so much at that time. Well, it was during the crisis, right? So I got a house put in my name. I thought I was balling. You know, I had all this money up front, but didn't realize that the house had been overappraised. I didn't even have I'm 21 in school. I didn't have a job. They fabricated everything and got this house in my name. And I'm like, oh, I have excellent credit. All of a sudden, I've got this 800 score. I've got money that they gave me up front. It's from people I trust and love. So I thought that I was taken care of. At no point did I think anything was fraudulent, because the way it was presented was that everything was great and on the up and up. Mm-hmm. And then when the housing market crashed, all of a sudden, I'm now 22 or 23 with a foreclosure. Okay. So yeah, it's failing forward, because I will never make that same mistake again. But at the time, it was something that was learned. So it's the same thing, like the failing forward. I never take anything as a mistake. It's a learning lesson. And that's big of what you're saying. Leads me into my next question.
My first deal too.
Yeah, I mean, it happens. But again, we also come from a different culture where, like you said, you didn't come from people that were in real estate. You didn't come from entrepreneurs. You didn't come from that background. And I have entrepreneurs, but then they're all like doctors and stuff. And not some in the field that I'm in. So that's a completely different ball game when you don't have that. And, you know, we're already 10 steps behind of other cultures, because they came already kind of in families that knew that and had that knowledge, right? Yeah. We don't have that. Yeah. So we have to create it for ourselves. And the best way to do it is to fail forward.
You got to fail forward.
Yeah.
You know, especially this first generation. I mean, a lot of us is first generation entrepreneurs in our families. So, you know, whatever the case may be. So that's just what it's about. So I think anyone that feel the need to get on a journey, like an entrepreneur, business owner, trading journey, and think that you're not going to lose, it's impossible to not lose on your journey to success. You know, I tell people all the time, you know, look at every successful person that you know. And I promise you, there's failure on their journey. There's no journey without failure. There's no mountaintop without the valley. So understanding that the valley comes with the mountaintop, you just have to weather the storm along the way, and just kind of learn your lesson through each issue that you go through.
So let's get into what you actually do, because this is major. First of all, we said before, we are grateful to have you on, because not only are you a private lender, but you are an anomaly, because trying to find a woman in private lending, trying to find a Black person, and then to find a Black woman in private lending is unheard of. So can you, because we have a lot of new investors, can you explain and give the definition of creative financing and how it's set different from traditional lending, and how you got to where you are in private lending?
Absolutely. So thank you so much for that. So I'll start off with kind of how I got here. I was very similar to the other young lady who spoke, saying, you know, when you as a real estate agent, you kind of do everything. You put your whole deal together. You're going to go out there and find a deal. You're going to find financing. You may find have to find, general contractors and, just everyone to almost kind of put your deals together. So over time, just being in that space anyway, and just having that financial degree and having that master's in finance, at one point in time, I was more heavy in real estate, and I wasn't really working my financial degree. But this is kind of how God works, is, he gives you these gifts and he expects for you to use them all. So at one point in time, every real estate deal I had on my table failed, which forced me to look at, I do have this financial degree that I really need to start putting into play. And that's from, you're talking about finance from a lot of different angles. You have financial advisory, you have financing, you have funding and things of that nature. So I began to really, about 8 years ago, I began to really put in play, just providing financing and creative financing to business owners and real estate investors. One of my motto, and we're probably going to write it on the wall here in the office, our motto here is nothing moves before the money. And when I learned that at a very young age, that I can find as many great real estate deals as possible, but if I do not have the proper financing in place, I just have a lot of great real estate deals. So understanding that and just being in this financial space, it was the only route to go. because nothing moves for the money. No real estate transaction is really going to be transacted unless you are moving cash or any type of money. It's really hard to really jumpstart your business with very limited cash and limited money. So the more money you have, the bigger your business can grow. Trading, I mean, you absolutely need your own cash to even start trading. So, you know, just understanding investing, a lot of it, the nuclear of investing is money. The nuclear of investing is financing. So that's how I kind of not necessarily transition or evolved into just wanting to become this direct private lender. Now, previously I stated that if this didn't work out, I wanted to go to Wall Street in New York and really land a really lucrative job there. But the way God works, you know, my partner and I decided that we was going to merge our lending business. Our corporate veil is called Capital on Demand. And the way God works is that he said, no, you're not moving to New York. We're going to create Southern Wall Street. So I was like, wow. So when God began, you know, when God began to put these visions in you, and I'm like, yeah, I want to create Southern Wall Street. And what I mean by that is there's billions and trillions of dollars that are being transacted and moved through Wall Street in New York. But 97% of America has no access to it. They don't know who to go talk to. You don't know who moving wet money. You don't know who lending. So it's very inaccessible. So what we want to do is create an extension of Wall Street here in Atlanta called Southern Wall Street to make it more accessible to business owners, make it more accessible to investors, make it more accessible to people who need capital to grow. One of my other mottos, I'm very big on quotes, as you know, I started off, you know, provided that one quote. I'm really big on quotes. And one of my quotes is that money to a business or money to a real estate transaction is like water to a tree. It's impossible for your business to grow without the proper funding. It's impossible to really finance or buy and sell that piece of real estate if you don't have your own cash or you have some type of financing that you are connected to. So nothing moves for the money. And with that being said, we came to a conclusion that we wanted to control the money. Because if we control the money, we're able to deploy the money. You have to understand, if you don't have a seat at the table, they pick and choose who the money goes to. There's not a shortage of money. There's not a shortage of things being built. There's not a shortage of developments. There's not a shortage of any of these things. It's just the fact that who sits at the table are the ones who's picking and choosing who receives the money and who that money's been deployed to. And with us being in this industry for a little while now, for over 8 years now, we realized that there's a lot of redlining in this industry. There's a lot of people that would never, ever receive capital if you're looking for real estate investing. And you know why? It's because as a lender, as a private lender, I have the ability to pick and choose if I want to finance your deal or not. So with that being said, with us being at the table, we make sure capital is being deployed in low income areas. Capital is being deployed to people who normally would probably get turned down from traditional banking. So with that being said, I wanted to speak the difference between traditional banking and private lending. So traditional banking, it requires you to have all your financial documents and also capture at your DTI. And there's only so many real estate investment properties that you can really own in your personal name because your DTI is capped, because your DTI. That's really how traditional banks really cap you on how much they'll be able to lend to you.
And DTI, wait, let me pause you because for our audience, DTI means what?
Yes, DTI is debt to income. So when you go to the bank and you're going to get a property to live in it, they always calculate your DTI. Your DTI has to be anywhere from between 42 to about 45% or below. Anything above that, sometimes sometimes you can go to about 47%. And there's some banks that can probably go up to about 52%, but you want to stay between 42 to 45% to ensure that you get the best interest rates as well. So traditional banking is the banking It's the traditional banking that you're seeing. It's the Bank of America, the Chase. It's the, your traditional lending institutions that are all federal insured by Federal Reserve and things of that nature. Private lending, we're not necessarily regulated by any Federal Reserve. These are private investors' money. So say, for instance, you had $1 million, you can dump your money into our fund, and we're able to deploy it out into our real estate deals. So private money is not necessarily regulated like traditional money. The difference between qualifying for a private loan is that we are pretty much no doc to low doc qualifications. So we do not need your tax returns. We do not need your bank statements, your income verification, nor your pay stubs to qualify. We are truly investor. It's a true investor-friendly loan product. Most banks are not investor-friendly. They want to deal mostly with homeowners. So they will lend to you as a homeowner. But when you begin to try to build multiple portfolios over time, that's when they begin to cap you at your DTI. Another great thing about buying in private is that everything goes into your business name, so nothing goes into your personal name. So with that being said, it keeps your DTI cleared. So if you ever did want to go and buy something with your personal credit, you have the ability to do that, and you're shielded because your investment property is 100% in your business name and is not showing on your personal.
So what are you saying is that, well, I want to unpack a couple of different things. So, but the first thing is, hey, you need to have it in your business name. So are you saying that you need to come with a LLC or a corporation? As I'm coming to you as a private lender, I cannot come to you as Courtney Harrington. I have to come to you as Courtney Harrington LLC. Absolutely. And such, right?
Yes.
That's what you're saying.
So it has to be an entity name. It could be an LLC, an S corp, a corporation. Right. It just has to be an entity name. Yes. We only lend to businesses.
Okay. And so then the other thing is, how do you get assurance that I'm going to pay you back? So I've gone and I've gotten my LLC and I make, I think we have in here, you're listing, I'm helping people out that have low income. And so I have a low income and I just need to get on my feet. I want to get this house. How are you going to ensure that I'm going to pay you back?
So that's a really great question. And honestly, we're taking a lot of risk because there's no surety of you paying us back. Income is not a qualification for a loan. So you can have no income and you can still qualify. You can have no income and I can qualify you for $1 million loan today. It's really your ability to make those, to bring the money to the table, the down payment, your closing costs to the table. We really don't. We're really taking a lot of chances on helping an individual who will always, or who will get turned down by traditional banks. And we're taking a chance on that investor. We're giving you the ability to come in and be able to take this property down. We'll provide up to 85% of your purchase price and up to 100% of your rehab. So really it's your skin in the game, hopefully, that will make you want to complete the loan because you have that 15-20% of the purchase price that you got to bring to the table. So, I mean, you have some skin in the game as well that I'm hoping that you don't want to lose. And also you don't want to lose great banking relationships and investor private lending relationship of creating that foreclosure and default history. As well. So we're really taking a chance. So, I want to take a chance on any real estate investor who are serious about getting into the real estate business and really showing them how to qualify. That's another thing about having proper representation at the table, which is one of the reasons why my partner and I are so adamant about being a direct lender, is because no one is telling you that your I is not dotted and your T is not crossed. What they will say is that you're denied. But what we do, we're educational driven. Most lenders would not tell you to dot that I across that T, especially if you don't know. But what we do, we're educational based. We understand a lot of our clients may just not understand the paperwork process. As you were stating earlier, I can get the deal done, I can go out and find a deal, but the paperwork process, I may not just have all my ducks in a row. So we teach you, hey, just go here and dot that I right here, cross that T, resubmit, and you're ready to go. So we want to help individuals qualify, but if you begin to get a track record of foreclosures and defaults, then we'll just have to put you on our do not lend list.
So that's something I wanted to kind of have you go in a little bit deeper. You kind of mentioned like there is a default process, there's a foreclosure process, and I heard you just say there's a do not lend list.
Yeah.
So how does that, if how can I put this? What does that foreclosure process and default process look like for you guys? Just like from a high level standpoint, like is the foreclosure is going in this person's business name, and like moving forward, they would have issues getting funding from any private lender, or how does that work?
No, actually you won't. I mean, honestly, you take a page out of Trump's book. If you default, you just close, bankrupt the business, and you start a new one, and no one would ever know that you did that. So that's the beauty of dealing with us as a private lender, that we won't know. But what we will know if you come back to us as the same lender, because you may have a different LLC name, but your name doesn't change. So you come back to us as a lender with a different LLC, we'll just say, hey, you defaulted on our last loan. We're just not going to be willing to lend to you. However, the foreclosure process is very simple. All residential loans are non-recourse, so we do not go after you as a borrower. We are just going after the property. So we will just foreclose, we'll take full possession of the property, and we either going to finish renovating the property and we make the money, or we'll sell it to another investor.
And what about your rates? Oh, I'm sorry, Ebony, go ahead. I can say mine.
No, because I wanted to kind of
the wheels are turning. Go ahead.
Yeah, no, that's that accountant mind, Courtney. Go ahead. So yeah, that actually is a really great question. What are the rates for these private rental or residential, not residential, real estate lending? What does that look like for those rates?
Yeah, so our fix and flip rates starts at 9, or really like 10, between 10 and 11%, which is pretty industry standard. Like I tell people a lot when it comes to interest rates, unless someone is doing like predatory lending where it's like 15, 16, 17%, where it's just like, it's not even industry standards. Interest rates really is, it's just the cost of borrowing. It's the cost of you borrowing. But I know a lot of people shy away from private lending because they don't want to pay the interest. But I look at it like this. If someone is willing to give me almost 90% of purchase and 100% of rehab, so I can go out there and make $150,000, and all I got to do is pay them $25,000, we have to understand how to pay to play. We have to understand how to play. That's just part of playing to play. You have to look at the upside of what you're really making and continue to reinvest those profits until you don't need a lender. But however, the name of the game is always OPM. If you studying the wealthy man's portfolio, even the wealthy man is not using their cash. So, if you understanding their footsteps, why would we do anything different? So even a guy that has hundreds of millions of dollars still will use the bank's money, still will go out there and try to raise as much money of other people's money as possible. So I always take those strategies and those scenarios and just apply it to my individual life, and just understanding investing. If they using other people's money, then I should always put myself in position to leverage other people's money too. And if and you got to understand the power of leveraging. So the power of leveraging, say for instance, you had $100,000 cash and I had the same $100,000 cash. You decided that you didn't want to leverage and use other people's money. You decided that you wanted to just pay cash for it. That's the boss moves, right? I'll pay cash. Everybody want to pay cash, not realizing that that's really not the boss move. The boss move is really leveraging other people's money. So you will pay cash $100,000. So say for instance, you find a property for $75,000, you need to put 25 into it, you can make 150, right? So that $100,000 is your acquisition and your rehab to make $50,000 profit. I look at the same deal. However, I choose financing instead. I just stated that we can give you, for simple terms, just say we can give you 90% purchase and 100% rehab. So that same property, you purchase it for $75,000, you put $25,000 into it. I purchased the same property for $75,000. However, I only have to bring to the table 10%. So 10% of $75,000 is $7,500. Mind you, you just put up $100,000 to make $50,000. I just put up 7,500 to make 50. So how many properties can I really buy if I'm putting up 7,500? While you would allocate your full 100,000 to one property, I'll allocate my 100,000 to about 4 properties. I'll make 50,000 times 4 in the same amount of time that you'll make $150,000. So that's the power of really leveraging your money, is being able to stretch your money out and be able to do more deals.
I'm hoping that everyone who's listening just really soaked in that breakdown she just gave, because that's the game. That's literally the game. If you're in real estate investing and you really think that it's dropping those bags, like, you know, taking that big amounts of cash to the closing table, you're probably doing some things wrong. It's about leveraging other people's money. So thank you for that.
And also the interest rates for our rentals, we haven't gotten into that. And if you do ask, I could talk about that, but just the interest rates for our rentals. So we have a true 30-year note, just like a mortgage. Just like you went to the bank and got a 30-year mortgage, we have a true 30-year amortized note as well. And that interest rate starts at 5.5%. Mind you, prior to COVID, traditional banks was at 4.2. And we was at 5.5. So it was only like 1 point higher than traditional banking for our true 30-year note that we don't need any tax returns, bank statements, income verification, or pay stubs for. So our 30 years, so anyone that's looking to really go out here and build a rental portfolio, mind you, we do not take in consideration your DTI, so you can own a limited amount of properties, and our interest rate starts at 5.5%.
Okay, so follow up to that. So I know you said you lend nationwide, but so I'm in Texas and I find a property. Let's say I'm doing some virtual real estate and I find a property in Alaska, whatever. You're in Georgia.
Yes.
I could get a 30-year note for 5% interest in my business's name, and it's no problem.
No problem. All 50 states, we can lend up to 80% of the asset's value. So, you know, I was talking to a traditional banker guy who don't really do private.
Excuse me.
We don't realize that we're sisters, huh?
Excuse me. 80%.
Yes.
Every other hard money lender, I'm approved with 2 hard money lenders right now, only do 70, maybe 75.
Right. Yeah.
Most of them are
80.
between, especially
we just got back. We was always at 80 prior to COVID. We just got back to 80.
So with COVID, it was 65, maybe 70.
Oh, no. It was at 80. We was cashing out 80%. Cash out refinances, 80% prior to COVID. Now we're back at 80% again. Our cash outs is 70, 75%. Purchases, 80%. And like I was telling the gentleman, you know, I was going back and forth. How? I said that, well, the name of the game as a real estate investor is to always buy at a discount. So we don't buy retail anyway. So you should be buying that 60, 70, 80% of the value of the property anyway, where it allows you to walk right into our 30-year with absolutely no down payment, because the down payment is in the equity.
Okay, so we got some offline, and I think a lot of it does boil down to the market, right? Like you said, like you have to be able to get the property at a discount in order for the numbers to make sense. Yeah. And is there a cap to the type of loans? Is there like a limit to the amount for these loans that you?
We can go up to $2 million on our 30-year.
Okay, we're gonna take this offline.
Those Cali prices right there. See, I was expecting something in 100,000. You're talking about millions. That's out here. That's out here in the Bay. That's Cali.
Absolutely. Like seriously.
Okay.
I am in awe.
Really understand, and that's the power of numbers. When you really understand financing and numbers, you can really back your way into any deal to bring minimum money to the table. And that's what we do. I mean,
I am in awe.
That's what I teach, and that's what I do personally. Is, you know, I took a page out of Beyonce book. You want to reverse out of debt.
Yes.
Reverse out of debt with the equity. Listen,
I love to see it. Okay, I'm happy. I think all of us are kind of like jaw dropped right now. We love to see it, and we definitely will be talking to you more offline. But I do want to kind of shift into what you just said. You stated like that your mission is to help low income households And we talked about like how you're doing that with the low barrier to entry with these loans. What are some other ways that you're helping people on their way from really out of poverty to financial freedom to generational wealth? Like, are you doing classes? Do you help people with investments like outside of real estate? Like, what does that look like?
Yeah, so one of the things I recently launched was my Wealth of None, which I've been trying to launch for a couple years now. But I'm really, I'm really out here doing work. But my focus is to really launch my Wealth of None, which is pretty much going to be a weekly or a monthly or bi-weekly Q&A, financial advisor, real estate funding, just full financial advisory from a holistic view. Because what I like to do, I specialize in real estate, but most importantly, I like to teach from a holistic view. That's what I was talking about trading earlier. I like to teach from a holistic view. So the key to wealth, or the journey to wealth, there's only 5 roads to wealth. There's many, I would say it's only 5 journeys. There's many roads on those journeys that you can take. So when I'm speaking with one of my mottos, or one of the things that I want to accomplish, just looking at the average income. We're all African American women, so so looking at the just African American average income compared to other races and compared to other backgrounds, we are last. Our net worth is below $20,000. Our average income is $30,000, and this is from a holistic view of us as just the Black community. So when I seen that, I'm like, wow, we are behind, but we don't mind getting out here trying to figure it out. So the key is that we want to figure it out. We want to understand it. So my goal is to help us come from 30,000 average income to a minimum about 80. The top, not the top, but the average household income is around 80,000. So I want us to get to a point where we minimally have a household income of 80,000. We have to understand the power of having a household income of a minimum of 80,000. In some areas, it should be about 140, like in California. You probably need to be around 120, 100 to 120,000 for that to make sense. Probably about 60, 70,000 each. So 120 to 150 for that makes sense, like in the California area, parts of New York and things of that nature. But in other states like Texas and Georgia, $80,000 household income is very, very doable. And one of the ways, and it's very simple, is, most of our households are single households. So we have to begin to double up our income through partnerships, through marriage. I think I posted something the other day. We got to get from relationship and rent to home ownership and marriages, because when you're thinking about it like that, is that you could live off one income and you can invest completely the second income. So if you're making 80,000 and you have $20,000 to $30,000 a year to invest from the second income, there's a lot of things you can do. You can start so get back to, with that being said, get back to those 5 routes to wealth. It's only 5 routes to wealth. So even as an entrepreneur, as a person that works in a job, if you want to get to a point of financial freedom, even as an entrepreneur, you want to get to a point of financial freedom. You have a lot of doctors right now that doesn't feel like they're financially free. They work in 120, 30, 150 hours a month. A month, and they don't have a lot of time for themselves. Are they really financially free? Is a doctor really financially free, although they making $500,000, $600,000, $700,000 a year? Because you're financially free when you no longer have to be there and you can still make money. Most doctors, their intellectual properties is in their hands, is in their mind. So when they're no longer there, they don't really make money unless they turn their understanding of what they do into a practice, a business ownership, where now you can house other doctors. So the 5 journeys to wealth is real estate, business ownership, Not, there's a difference between entrepreneurship and business ownership. Business ownership comes with systems. Business ownership flows if you're not, even if you're not there or you are there. Entrepreneurship it starts and stops with you. If you
Yes,
you're not
go
processing
there.
today, you ain't making no money today. That's what entrepreneurship is, which is the step to business ownership. Business ownership is when you create those systems and your system flows. And with or without you being there or not, you're making money because all you have to do is plug and play people in your system, and they work the system for you on your behalf. That's when it becomes an asset. That's really when it becomes asset. Entrepreneurship is not really an asset only because it stops and starts with you. You have to turn your entrepreneurship into a business ownership and create systems so your business can flow even when you're not present. So it's real estate, business ownership, trading. I do recommend a full trading portfolio. I recommend a diversified trading portfolio. You have some stocks that you're going to do kind of more of a buy and hold play. You have your day trading stocks that you may be in and out every day or weekly. You have your stock options. You have your crypto. You have your forex. Just being able to, if I, building out that portfolio, a trading portfolio, I want to see all of that in my trading portfolio. So that, and then I call the paper assets, which is your life insurance, your IRAs, your annuities. It's the asset that grows on paper, which everyone should have. What I do recommend that you put your money first into cash flowing assets. So what I did is break, the fifth one is commodities. So you're gonna have your diamond, your gold, your oil, things of that nature, be your fifth asset. But three of them out of all 5 asset classes gonna give you the full cash flow. So I recommend that you first start in cash flowing assets, and then you put your overflowing money into the paper assets and commodities if you're into diamonds and oil and gas and things of that nature. But you start out with your cash flowing assets, which is the top 3, which is your real estate, your business, and your trading. Those are the top 3 things that you be able to invest your money into that could make money over time residually.
Okay.
Just so you know, I'm taking notes.
Did you say gold? By the way,
looking down, I'm taking
gold
notes.
as well. I want to steal it.
She did say gold, diamonds.
Gold and diamonds, right? Because I think that's just key. I'm just gonna send that one clip to the husband. So first thing,
and diamonds,
just that one clip, right? This is why we invest in this, right? So I just want to unpack really briefly just one of the things that you said, and you talked about the marriage, the combining the wealth with marriage. And I wanted to just talk about that just briefly because there's a marriage penalty that you do pay when you combine your income, because now your income is greater and you do get taxed at a higher rate. But the thing that you said that stood out is that the other income is used to invest. Yes. And that is the key. Like you hit just the head on the wall, right? Because that is exactly what you do. You don't use that other income to build. You use that other income as a business and you write it off. That's where you get that I-9 from. And it's just total investment. It's just a total investment income for you guys to use and leverage and just have that one stable income. So I love what you said. And I wish that, other couples would just kind of learn that, and use that, because you all need an I-9 just to be able to write off that income. Write it off. It's a passion of mine. Can you tell? And so I wanted to just touch on that.
No. That's a really great point, because I don't think marriage couples understand the power of being married. It's such a power in that. When you understand how you can bridge. Now, you absolutely right when you can kind of pull your monies together from a tax purpose. However, now one of the things that I believe in as just a millennium advisor, and I'd probably go against, Dave Ramsey and all these. To me, there's a lot of old, obsolete things that I just don't think work anymore. And it didn't work for a certain group of people anyway. So one of those things, I think, for the millenniums or, a certain group of people, it's hard for us to all put all of our money in one bucket as a marriage couple. It's like everybody money goes into this one bank account. That's one of the hardest thing to do, is put all of our money in one bank account. So what I do recommend is that you all create a savings account together. So, you know, I don't really believe in putting all my money in one bank account with anybody. You know, I just
Thank
don't.
you.
I'm an advisor.
Thank you.
I just don't believe. I just don't.
Thank you.
But I do believe in, let's do some savings together. Something we need to, you know, savings. You know, we may decide that we're gonna do $1,000 a month. Okay, you put your 500 here, I put my 500 here. So the key is that we may not put all of our money. That gives independency. You know, I believe in independency a little bit, or interdependency. And
Amen.
now is no, I'm not calling you, asking you, can I use my money? No, I'm not doing that. I want to use my own money when I want to use it. But what we have to do is create a savings account together, which I call pay my family first account. A lot of times we'll pay all these bills, we'll pay $200 in cable, we'll do a lot of things before we pay ourselves. So what I like to do is create it like a bill. You know, whatever that bill is, you know, a lot of our families are built where the man take care of a lot of the bills, and the woman is there to just blow their money. And I think that's where we got disconnected a long time ago, is that no one taught the woman to kind of be more strategic on their money, because the man was like, hey, I take care of all the bills. You know, you blow your money, do whatever you want to do with your money. So in our mind, we're thinking, okay, we can do whatever we want to do with our money. So we wasn't ever thinking building with our spouse, with our money. We wasn't taught building as a family with our money. So I encourage at least that savings account. You know, you all come up with that number, because you look at $1,000 a month. If that's something that you all can commit to, that's $12,000 a year. 10 years, and you know how quick these years are going by, that's $120,000 just in your savings account. And then I show you how to begin to take the money from the savings. That's how you're going to start your family business. That's how you're going to start that family real estate portfolio. That's where you're going to start dumping that money into life insurance policies and things of that nature, and making sure that you have that. So from that one account, begin to trickle over into those investments that you all are building as a family.
I'm legit taking notes. I have been taking notes this whole damn episode.
I think you got an amen corner over there.
Yeah,
and I'm learning something. I think that's big, you know.
Yeah, no, I think that's key. And I think the other thing, just, you know, not to steal thunder, but the other thing that I would say in addition to that is investing in your child's education.
Absolutely.
We're really big on that as well, and it's an honor and a privilege to be able to continue every month to put money to the side for the 3 of our children. And so I would say that in addition to making sure you invest in that. I want to go on to the next question really, really quickly, and then we're going to wrap up, because this has gone so fast. I mean, we can't answer everything, but I'll ask just one question briefly and just kind of talk about, as an entrepreneur, really briefly, what's your advice in regards to being an entrepreneur and investing in your retirement? Because a lot of times what we don't do is we don't invest for that. We don't put that money to the side in that reserve for later on in life. What is your advice in order to do that, since you're not earning that 9-to-5 401k traditional?
Right. No, that's a good question. And I got another quote for that. That quote says, retirement is not an age, it's a dollar amount. So society have taught us to think that we retire when we hit 62. No, you can retire once you make enough money coming in and out your bank account and your cash flow. Personally, I feel that everyone can put themselves on a 10-year retirement plan. So first we have to change our mindset of thinking retirement is 60-some years old. No, you retire once you're making enough residual income. Not saying that you retire. Honestly, I could retire right now, but I still love what I do. Retirement to me is not, where we're not making any more money with sitting down. It's the fact that I decided that once I hit $20,000 a month, I could really chill. And really, allow my investments to just take care of my lifestyle for the rest of my life if I wanted to. And anything on top of that could just be icing on the cake. So, I would say this, understanding that retirement is not an age, it's a dollar amount. So I would recommend for everyone to figure out what their retirement dollar amount is and begin to build that portfolio residual income to meet that dollar amount, so you can meet that in 10 years, 5 to 10 years. One of the things that I do, if you work with me or any of my services, I have a 10-year retirement plan. and teaching you, and we put together a real 10-year retirement plan using business ownerships, businesses, real estate, and trading, also overflowing into life insurance and annuities and things of that nature. But everyone can retire in 10 years. So I recommend for individuals to think about retirement as a 10-year retirement plan. Where you're putting your investments in place, where within 10 years, you're making enough money residual that it'll take care of you and your family for the rest of your life.
Mary, Nikia, we can.
Also, I say this too. You know, we you know, a lot of people don't want to get into real estate and things of that nature. And I say this: real estate may not be for you. Business ownership may not be for you, but retirement is. So the only way you're going to retire if you have these assets in your retirement portfolio. So you have to figure out which one of these assets that you just going to put your time and effort into building. You know, I have a brother that's not really into, you know, he's kind of quiet, so business is not his thing. He don't really want to get into real estate. So I got him into trading. It's something he don't have to talk to anyone. He can just sit there and build himself up. And right now he owns almost 100 shares of Apple stocks that's about to split into 4. Now you have a whole 400, you have a whole portfolio of 400 Apple stocks. So at the end of the day, you got to find what works for you and what works for you and your personality. But what works for everybody is retirement. And you have to figure out which one of these asset classes that you're going to retire on.
Yeah. I was gonna say, we're gonna have to have you back. Like we tried to fit this all in one. We still have more to
I was just thinking that, Ebony. I was just thinking that. Like, we're just gonna have to have her come back.
You're just gonna have to come back.
I would love to be a part of the show anytime. I feel like it needs to be more of us. Just speaking about wealth and understand. I mean, we're sisters, we're mothers. You know, we're all these things, and I think we'll beacon a light too. To a lot of people who just don't see any hope out of their situations, who are forced to see, you know, the poverty-stricken things that they see on a daily basis, but understanding even beyond that, there's a bigger vision, there's a bigger dream, even beyond that, and it help people to understand their options. You know, like we were talking about earlier, low income, you may not think that with absolutely no income that you can go out there and buy a piece of real estate. You know, and those options exist. So understanding the options that's out there for you and begin to walk that journey so you can, you know, build that law of attraction and begin to attract those resources and things to you to complete what you're trying to do.
Yeah, mic drop. Okay, all right. We got 2 more questions for you that we just gotta ask. Okay, so the first one is, which I kind of feel like I know the answer to, but I'm gonna go ahead and ask it anyway. How do you stay motivated? What books do you read if you're not a reader? Because we're equal opportunity here. What podcasts do you listen to? Like, how do you keep yourself going when, you know, you feel like times get rough?
That's a good question. Because I've been on this journey for a while, and it haven't always been good, but it's always been worth it. And I honestly say it's my passion, it's my purpose. And that's why I started the conversation off, find your purpose, because if you're chasing money, you're gonna get burnt out. There's months that can go by that I may not make or close any deals, but I still get up every day with that same passion because I'm operating in my purpose. So I'm not chasing money. So with or without money being made, I still get up here and have an hour conversation about building wealth because that's what I love to do. So first and foremost, it is my purpose and it is my passion. It's something that I eat, sleep, and I have been doing it since I was 17 years old. So it's just what I love to do. On top of that, what was the second part of that question?
It's what books?
The books.
Yeah.
Oh, and also what podcasts. So to be honest with you, I probably meditate more than anything. The books that I have read have always been books that have been pretty much value add to my career, from just, you know, getting licenses and certifications and things of that nature. I want to start reading from a leisure standpoint, but it's more been to just continue to get more licenses and more degrees and things. So that's really where a lot of my book reading came from. Outside of that, I don't really listen to a lot of podcasts. I want to take more time too. But to be honest with you, I meditate and I listen to the voice within who leads me. So regardless of what anyone is saying and what's going on outside of the world, I stay in tune to me. I stay in tune to my journey. I stay in tune to the footsteps that's leading me on a daily basis. Because if I'm focused on those footsteps, I can't get out of line. And I know that if I focus on those footsteps, it would never put me in a place where I shouldn't be. So honestly, I meditate more. I think as I get older, I probably start, reading more for leisure. But yeah, I'm more of a meditator. I really listen to myself more than
I
anything.
really appreciate that. Just being a yogi in California. So I wish that more people would just, take the stigma out of meditation and really try it. It really helps. It really does. It really does help just to be centered. So I appreciate that. Yeah. And then just a last wrap up, just a little fun, just to know a little bit more about you as a person, just a rapid fire, 3 questions that we want to know about you. And the first rapid fire question is, first thing that comes to your mind, just let us know. What's your favorite song when you are just feeling really good? What's your go-to, oh, I'm hyped, I'm good, I want to listen to this, I want to rock out?
That's funny. So I live in Atlanta and I grew up in the South. So I'm a Southern girl. I like trap music.
I was going to say,
I already knew it was coming.
I'm a trapper that's pulling up to my meeting, and I'm hyped. So
I knew it was coming. It was.
I was like, come on, trap music.
I'm moving all types of paths before I get to my destination. But yeah, that's
either trap or gospel.
Sometimes trap gospel.
Sometimes trap gospel. You already know. I love it. So the next thing is just everybody just always has those classic films that no matter how many times they've seen it, they're going to watch it over and over again. What's your classic film that you're just not passing up if it's on?
To be honest with you, I don't watch a lot of TV. I'm a meditator.
All right.
So I probably turn my TV on twice a month. And that's probably more so when my parents come in town or something. I'm a meditator. I'm a vibe out and listen to some music, and I'm just gonna meditate,
vibe out,
listen to my thoughts. Every time I turn on the TV, I feel like I got so much stuff I need to be doing. I feel like the laziest thing I can possibly do when I sit down and watch TV. I don't know what it is, but I can sit down and just meditate for hours and not think about it like that. So I don't watch a lot of TV, but one thing that stood out to me is the Billionaire Boys Club, BBC. And it was this, they showed, it was like a documentary on how they kind of built the BBC brand. And there was just a lot of financial gems in there, just, how they was able to go. And although it came out to be something fraudulent, but, to me, it takes a certain type of confidence to go out there and raise a certain amount of money to get people to invest into stocks that they haven't seen, and things of that nature. So, there was a lot of financial gems. And the Wolf of Wall Street, although there's a lot of, there's some fraudulent things at the end, there was a lot of financial gems that was dropped in there. So I like to watch, when I do watch movies, something of that nature that I can pick up some gems from. Yeah.
Where did we where could we have used our leverage, our skills the right way? You know what I mean? But still kind of see what man, we are so talented. If we could have just used that talent the right way, but it's not always our fault. It's because we just don't have, there's a barrier to entry. Right. Yeah. And so we kind of just go with what we know. And so I feel you. I do like those type of documentaries as well. Mm-hmm. And the last one is just bucket list. Just one thing that you're really looking forward to doing.
My number one bucket list right now is really building Southern Wall Street.
Okay.
I'm not going to stop until, we just deploying billions and billions of dollars nationwide in every, low income area, gentrified areas, because, I don't believe in truly gentrification. Gentrification is really inevitable, is impossible to stop. But sometimes, I want to be more on, instead of us gutting the hood and making it look like Hollywood and knocking everyone who built the hood out of the hood, which you got to understand, most of the people that is in these neighborhoods, these low income neighborhoods, this is grandmama house. This is a house that been in, you know, everyone was raised in. And then we're knocked out of those things because they're coming in gentrifying these areas. Instead, if we had enough money to gentrify our own areas, we won't go in and build up these, as you know, these luxury buildings and things of that nature. We'll go in and just preserve. We'll go in and preserve the areas. You will go in and renovate, but not necessarily make it go in and build out something so big where the homeowners that was currently there can't pay the taxes and things of that nature. So you know, so I'm just kind of big on that as well.
I think that's beautiful, and I think that's just a great wrap up. But it has been an honor and a pleasure, Reunekiea, to have you on and just get the guidance that you've given us and just share that wealth of knowledge with us. So thank you so much for being here.
Thank you. Thank you all for having me. And anytime, I would love to come back on the show and you know, just talk more wealth and real estate.
I love it.
More, you know, more of this seen on a more national scale, and you know, so I love to be a part of the show again.
Absolutely. You are welcome anytime. Thank you so much.
Absolutely. Thank you all.
Thanks.
Bye.
Bye.